Following up after a bad week for tech companies, with Twitter and Meta laying off employees. Now we've got Amazon losing $1 trillion in market value. For context, that's about how much the parent company of Google is worth. Not just that, but this loss makes Amazon the first ever company to publicly lose $1 trillion, at least according to Bloomberg. Let's look deeper into how this happened and some other lawsuits it's facing, starting with losing $1 trillion. Amazon stock had fallen to 48% of its value from just a year ago, compared to last July when its market cap was almost touching $1.9 trillion. Back in November, the company's value in the market fell under the $1 trillion mark just days after it predicted that its sales would slow down during the holidays. Though Amazon is far from the only tech giant losing money because of the rising inflation and slow economy, the top 5 tech companies in America have lost about $4 trillion in market value this year. The company's CFO, Brian Olsavsky, said around the end of October that they're seeing that people have a tighter budget now since inflation is high and energy costs are adding further problems. Like other companies, they're now preparing for much slower growth. On the other hand, Jeff Bezos' net worth has also taken a hit following this debacle. The 4th richest person in the world is now worth $113 billion, despite starting the year at $192.5 billion. Moreover, how's Amazon taking care of it? Though this does worry all companies in the market since the economy's slowdown is bound to hit everyone, while companies like Meta and Twitter have announced massive layoffs to cut costs, is Amazon next in line for such drastic measures? Since many people could not go to stores during COVID, the company saw a massive boom in traffic and sales. As we reached the end of the pandemic, people started to go more into the physical stores, ending in a slow decline in their sales. Already disappointed by the company's earnings for the third quarter in 2022, investors' hopes were once again crushed when they predicted a year-on-year growth of less than 8%. Andy Jassy said that the earning reports for the third quarter show us a lot about what's going on in the macroeconomic environment. Because of that, they'll have to balance their investment so things are easier to manage without putting their long-term strategic bets at risk. This also means they'll have to make some massive changes. But instead of a huge layoff, they're planning on expanding their hiring freeze to ensure its current employees are adequately covered. Senior Vice President of People Experience and Technology at Amazon, Beth Galetti, says this slowdown could have occurred because of an uncertain economic outlook and a rise in hiring over the past years. Lastly, Amazon stock takes a hit. The stock price for the company as of the 11th of November was $96.53, with further data claiming that its price has been in decline for about a year. Its price has been going downhill, and experts think its market segment was unlucky or unpopular during the given period. But there's a lot that goes into predicting stock values, such as changes in price, market cycles, volume, and other similar stocks, and they're expected to make a considerable rise given another year. Experts claim an increase of 149.79% is to be seen, with a single share costing about $249.79 after a year. The tech giant isn't alone in such stock behavior. Many other similar companies are going through the same, but are expected to rise higher than ever. Amazon to face $1 billion UK class action lawsuit over alleged antitrust breach. Coming up, more on the lawsuit. Amazon again faces a lawsuit in Britain for $1.6 billion for supposedly taking advantage of its positioning to push forward more of its products. According to the law firm behind the case, Hausfeld, the company has made millions of its customers pay much more by hiding better deals so people buy more of their products. Hausfeld says it's breaching competition laws by secretly using the algorithm to favor itself through the buy box features on its website. All people in the country who have purchased anything off the website since October 2016 would fall under the claimant class. Competition and Markets Authority, or CMA, started to look into the company's competitive behavior on the 5th of July 2022, using powers given to it because of Chapter 2 of the Competition Act of 1998. Its marketplace in the UK could have violated the antitrust law by getting seller data from a non-public third party in its retail business. They could then select which product would show up in their buy box and be sure of the product that sellers would list as a prime label. The lawsuit was to be filed at the Competition Appeal Tribunal by the 31st of October. The damages to be paid are based on economist estimates of possible losses and could go up to $1 billion. Despite the company saying the case is without merit, it will still be the most recent mass action against a tech giant filed at London's Competition Appeal Tribunal. Moving on to taking advantage of customers. A lawyer for Hausfeld, Leslie Hanna, says that the website has been taking advantage of its customers, knowing they will focus on displays if they're eye-catching and prominent enough. Additionally, the lawyers say they should be stopped from taking advantage of its customers, especially in an anti-competitive manner. Millions of people have had to pay too much without a choice. Currently, the CMA is looking looking into its anti-competitive habits, relating it to buy box, while the European Commission has been in talks for settling the case on a possible bias. Though class actions of this degree are rare in the UK, they're primarily opt-out, meaning that they take on behalf of all people part of the class unless they back out. UK law's recent changes have allowed for many opt-out class action cases, with cases against Google and Meta still going on. Additionally, a clear trend. Committee member of the London Solicitors Litigation Association, David Green, says that such actions for consumers that can claim billions of pounds are new processes, and all the courts that are part of it feel the same way. But there's an obvious pattern to this. The company must fight the case at all stages, including class certification. The tribunal has recently made decisions on similar matters, certifying the opt-out process. Though it's hard to tell just how successful these cases will be, big tech companies have enough resources to fight it. Recently, Amazon offered the European Commission to avoid the vast EU antitrust fine placed on them since it faced similar charges in other countries. Not just that, but they also need to explain their product search systems to a competition regulator in Australia. In 2021, the company appealed a massive penalty of $865 million because it violated the European Union's strict data protection rules. Similarly, another recent lawsuit. The company was accused of selling so-called suicide kits to teenagers, resulting in another lawsuit. Two families lost their children to the kit and filed a lawsuit against the e-commerce giant, saying that their kids bought a deadly chemical off their website and used it to take their own lives. According to The Independent, parents of both the 17-year-old Ethan McCarthy and 16-year-old Kristen Johnson argue that the company is just as responsible for their children's deaths as the sodium nitrate is. This simple food preservative can be lethal when highly pure. They filed their complaint in the California State Court. The lawsuit claims that the website told buyers who purchase such chemicals to buy a scale to measure the correct dosage, an anti-vomiting drug, and their special edition of the Peaceful Pill Handbook that has a chapter on how to put these ingredients together to die. Two attorneys for the families, Naomi Leeds and Carrie Goldberg, said in a statement that the website sells a product that can be as deadly as cyanide. Moreover, they added that it's nothing like selling knives, ropes, or similar objects, since those have a household purpose, unlike the chemical and the purity level it sells. When the drug is used in a low-concentration form in commercial food preparation, it can be lethal to those consuming too much of it, leading to abdominal pain, difficulty breathing, and even death. Some samples sold by the website are highly pure, meaning they are very, very toxic. Finally, misuse products. The attorney for the case stated that they came across a similar complaint recently in Washington, stating that the e-commerce website sold the drug to two more people to use it to commit suicide. On the other hand, during an interview with The Independent, the company extended deep condolences to the people affected by such instances, saying that keeping their customers safe was their top priority. Moreover, it added that sellers must follow laws and regulations. Furthermore, another spokesperson for the company said that the chemical is legal and is mainly used in labs and food as a reagent, but it's in no way meant to be consumed directly, and like many other products, it can also be misused. What are your thoughts on the lawsuit? Let us know in the comments below. Make sure to give this video a thumbs up and subscribe to our channel for more videos like this, and we'll see you at the next one.